Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 11th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, I mentioned not a whole lot of data coming out today, but we did get JOLTS job openings, which isn't really widely looked at. Came in at 5,670,000. Was expected to be 5.98 million. They also revised last month's number down. Wholesale inventories came in slightly higher than expected. A little bit wanky there anytime inventories rise. But then we also have Bernard and Kashikari speaking later on today. Job openings was pretty much a catalyst to jolt the market, if you will, earlier on today. But the markets are recovering as that data point is not really that important to look at necessarily. Important, but not one of the most important ones or widely looked at by economists. Anyway, we got crude oil futures moving higher today, pushing up against the 61 fib level. Had that bounce down. Now we're kind of trying to recover a little bit, probably a little bit of short covering ahead of the economic data point for the crude oil inventories, which should be coming out tomorrow. So keep that in mind. That's maybe just a dead cat bounce, if you will, or just some short covering going on in crude oil futures. Gold, though, is bouncing as well. So we're kind of seeing these commodities have a little bit of bounce. The grain market's been crazy for the past couple of weeks. But anyway, into these commodities, we've got a bit of a bounce here. That's kind of looking like a nice little bottom there. SLV is another one that's kind of making a bit of a bounce. GLD, all of those kind of looking like a move to the upside is happening. So it's going to be all about trying to break through right now for gold futures, this 38 fib level, and settle above there. Then onto the bonds. They're kind of getting more comfortable right here at the point of control, which is what I spoke about. With all of these Fed governors coming in and Janet Yellen speaking tomorrow in front of Congress, a lot of this is probably going to settle into a sideways range and then try and make a move depending on some of the wording of what she has to say, or Kashikari and any other Fed governor that's speaking in the next few days. We got Dow Jones Industrial Futures. Another reason those commodities are moving higher, bonds moving slightly higher, is the equities in general are down across the board, especially after this morning's move off of that JOLTS job number, but have recovered, as you can see on this doji, the down strike, and then we're back pretty much to unchanged for all intents and purposes. Dow Jones Industrial Average down about 14 points right now. E-mini S&P, the NASDAQ almost regaining all of the losses seen, down only about a point and a half or so, but something to keep in mind, this 50-day moving average, it has tested both the 50-day moving average and the 9-day moving average and acted as support and resistance for both of those respectively. So stuck right there in between it. Really needs to kind of break out of one or the other. As long as it's above it, it's kind of bullish, but the long-term trend says bearish. It's really kind of wanky. We need to have a move here happen in order to really discern a directional bias. E-mini S&Ps, again, down on the day, down just about 5 points. They are really struggling to get above that 5-day moving average. But again, you can see 5-day moving average acting as resistance, 50-day moving average acting as support. Bit of a flip from the NASDAQ. NASDAQ had the 50 on the top and the 9-day on the bottom, but right now they're still acting as they should, as support and resistance. If we look at this on the 30-minute chart of the E-mini S&Ps. This is the economic data point. You can see we just got slammed on it, and the market has recovered quite a bit since that time. So overall market's pretty much unchanged right now. Not a whole lot going on since that one, basically that full hour of trade that was going on. Onto the trades that I've done or taken off with this EA Sports. Decided to take it off with this bit of a bounce right there at the 50% of my max profit. With EA Sports, I had on the July 104 puts that I was short. Originally sold it for $1.34 and bought it back for 61 cents. That a little bit better than 50% of my max profit, but when I started deciding, it was right there. So I got a little bit better pricing just with that move today. Triple Qs. I've talked about this. I think we're going to get a little bit of a move to the upside here. The economic data points haven't been too bad. Plus, I think that it's ready to kind of pierce out. So I'm looking for Qs to make at least a little bit of a move. Went into the August and sold the 131 puts, and I collected 84 cents for that. So that's an opening trade. 131 puts gets me down here. My break even is, really close to 131 puts. So selling the 131 puts, and then you add in that credit, it gives me all the way down to about 130 for my break even. So I'm below this support here, below this support, and by the time it gets down there, if it does, it should be kind of in line with this 200-day moving average if we continue to slope up, and that should act as a major support for me. So I think I got a couple of good supports going on in order to hold this trade in good position. So then on to American Airlines. Just looks like American Airlines is a little overdone. Has high implied volatility because it has the earnings coming up. But having said that, I put this in my IRA, just adding a little bit of short position in there. I was able to get up there and sell the 53.5 calls, which is above the 52-week high. Thought that was a good location there, and went into the July, so it expires before that data release. Not a whole lot of time left in it, but I should be able to get a lot of theta decay going on in the last 7 days, so I'm getting in just in front of that, and I got a trade location that's above the 52-week high, so I'm hoping that we can get a little bit of a rollover here. And went into the July, sold the 53.5 calls, and then bought the 57 calls to define that because it's in an IRA. That's the first strike that I could pay less than a nickel for, and collected a total of 37 cents in there. I also put this same trade into my trading account, and I did it as a naked strategy and went in same strikes, sold the July, sold the 53.5 calls, but I did that outright and collected 43 cents for it. So got those trade location above that 52-week high. Hopefully you can see a little bit of profit taking coming on ahead of that earnings call for American Airlines. So 10 days ago, should start getting a lot of theta decay out of that, and I should be able to achieve 50% of my max profit, hopefully in short step. Then XLI, which is the industrial sector ETF, just looks like we got a little bit of a tweezer top here, kind of breaking down below this doji here, so that's a bit of a confirmation to the downside. Of course, we'd like to see it settle down below yesterday's low, but I'm usually a little bit early anyway. So with XLI, I went into this September and bought this 71 puts and then sold these 65 puts to define that risk, create that put spread that is less than 50% of my 50% the width of those strikes, because I only paid $2.33. So I have a lower risk to reward ratio, which is great for a strategy like this, right in line with my rules. So if I can get a bit of a pullback down, especially if it goes down to test those 65 calls, then that's where this volume node kind of lines up. I'm hoping that we can get a bit of a move down to that volume node, and that kind of fits right in line with my strategy there. So looking for it to roll over a target of right around 65.50. I should be able to get 50% of my max profit out of that trade if we get that move. that trade also is in my IRA, albeit a lot smaller. That trade is in my IRA as well. All right, so that's about all I've gotten done today so far. Friday's webinar is going to be on the short put spread. We did the short call spread. I'm going to be talking about how to implement this into an IRA, and how to leg out of it in an IRA so you can have those basic long calls on for free. There's no sense in really covering those because of the way I set it up, especially like with my my American Airlines, the way I set that up, I had to define that risk on those short calls. If I get 50% of my max profit on that trade relatively quickly, I'll probably just lead those long calls on just for some bizarre reason that the market kind of spikes higher, just to leave it on, like I did with Starbucks and a few other ones in my IRA. All right, that's all I got for you guys today. Go to ProTraderStrategies.com, sign up for that short put spread webinar. It's going to be a really good one. Had a lot of feedback, and it's been getting oversubscribed, so get in there early, and love to see the participation. All right, if you can't take that, take it easy.